Okay, so here's what our current portfolio looks like. It's got 25 stocks in it. 85% of those are U.S. stocks and 15% are foreign stocks. It looks like our allocations to the different sectors are a little bit more in line with the S&P 500 than they have been in the past few weeks. Although the cyclical is underweight a little bit, and that comes from consumer cyclical and the financial services. Energy still is a very high weight component in our portfolios, as well as technology and healthcare. And those three sectors together represents about 70% of the portfolio. Okay, going down here, it looks like our allocation 85% in the US, and then 4% in the UK, 11% in Europe developed. And then here's some characteristics about various ratios to describe the portfolio. The price earnings ratio is about 12.75, and that's about 75% of the S&P 500's PE ratio. Price to book is similar. It has a 2.38 ratio, and that's about 79% of the S&P 500's. Return on assets and return on equity are about in line with the S&P 500, as well as the expected growth rate going forward. Our dividend yield is about 68% higher than that of the S&P 500, and our market cap, the size of the companies in our portfolio average about the same as the S&P 500, maybe a little bit bigger. Our top 5 holdings are CVS, Total, Exxon, Adobe, and Microsoft, and those are all in the 5 to 8% range. So since we have 25 stocks, that's about a fifth of our portfolio. And you'll notice these come from the high-weighted sectors, for instance, healthcare, energy, as well as technology. And all in all, this makes it to where our portfolio is 100% large cap, and 23% of those are value characterized stocks, and then we have 21% growth, and then 57% of those are core, which include characteristics of both value and growth, or aren't easily separated between the two. So that's what our portfolio is this week, and I'm looking forward to seeing how it turns out.